Hey, this is Jack from Alpha Charts with a focus list video for super follows. Again, I'm going on vacation this week, so I'm doing all my work on Saturday that I normally spread over the weekend, which is why all this content is coming out today. And then I'll probably just retweet it tomorrow before I leave. I probably won't do my midweek video on Tuesday, but should be back by Thursday to do the evening note. Pretty sure. All right, but this is the focus list, so we're gonna keep this short and to the point. I am sharing this with everybody, so if whether you're a super follower or not, thank you very much. If you're not a super follow, consider becoming one at AlphaCharts365 on Twitter. Just click the subscribe. It's $10 a month. Again, you get special videos, which you saw this morning, my special stocks to watch. It's about an hour long. You get midweek videos, you get markets notes on Sundays and Thursdays. You get what else you get? You get scanning every night. You get you know, basically throughout the week, my thoughts on the market as we've seen the price action evolve. And yeah, I think that, and you get this focus list video right at the end of Sunday. They are the best setups I can find during the week. I think a pretty good value. If you're interested, again, at Alpha Charts 365, subscribe button right there. Okay, let's get to this video because again, I try to keep this video to 10 minutes or less. SPX has broken out. It's a little bit extended, right? So some of these may take a day or two to chill out before they get good entries, which is the most important thing we could do. But I think the market is strong overall. So two ETFs, and it's the same two that kind of keep showing up, right? I think SMH actually with this little pullback here and this little flag that it's creating is real interesting. So if it can just maybe it may take another day or two, but I really do like this flag that it's building out right there. And the other one is Robo. So those are two ETFs over the medium to long term, medium to long term, next week or so, that could show up. Again, Robo is a little bit extended, but love the way it broke out. Looks great. And it's, again, robotics and automation ETF. So both of those look really, really good, I think. Maybe, if Robo comes back to 55.75, that may be enough to start a position, right? Let's get to individual names though, because I think most people tend to use those more. First one will be DraftKings. All right, so DraftKings has this beautiful consolidation, and if I mean it's like right there, right? Like any breakout above this area looks really good. It's still in this it's kind of tight range consolidation. Breakout above 25.50. That's where I would consider managing risk. And again, I would start it right the 9-day, and then as the 23-day comes up and meets it, I would probably consider adding at that point, right? So that's DraftKings on the breakout. I think that makes a lot of sense. If it's just going to chop around, then I probably wouldn't want to be involved. I love the way that this volume that was drying up on the pullbacks. There's another low volume pullback. I would even potentially consider buying in the range at maybe a quarter position or something like that. Just a little starter, just even a handful of shares, just to kind of watch it a little bit closer. That's something. All right, Ari. So Aerie Technologies, it's a solar company. It's kind of had this little flag. There's your breakout. Again, nice volume on the breakout. Any continuation higher makes sense. And I love how it's straddling that 23-day. It's not as is that super duper tight. So you get position size accordingly, right? It's about, let's see what this is now, 6.5%, right? So if that's within your risk tolerance, great. You could position size as you want. But I like, for me, I'd probably would start with half a position and see how it reacts here, especially bumping up against this green zone. Now, if this just turns over, right, there's no reason to be involved in this particular name, but it looks like this 23 days is giving it some support, as we can see from here, and that's where I would manage risk against. APP, AppLovin. Again, I love this double gap right here. I mean, just really phenomenal. And I would use this VWAP right there as my probably initial stop. Again, it did kind of get some pullback, so I don't know if I'd buy this Monday morning first thing. And of course, you know my feelings on Monday morning gap ups. Do not buy Monday morning gap ups. If this Monday morning is a gap up, I would wait at least 30 to 45 minutes, 10:15 to 10:30, something like that, before I started considering buying anything. Don't chase extended stocks. That is the worst thing that we can do as far as risk management goes, in my opinion. The other one is adding to losers, right? But I really like this name. If it could break out above 25, 35, to 25, 50, somewhere in that range, move higher, that'd be great. It may need a few days though to chop around, but just really strong price action going on in this name. And that's all we could do is try to be in the strongest names possible in the right sectors. And Apple Oven is both of those. It ticks both those check marks. This is UiPath, PATH. And so there was some give back right here. And I would expect this maybe another day or two of consolidation and letting these moving averages catch up just a little bit more. Would love to get, maybe around $18, right? Something like that would maybe be a better spot, and then this moving average would come up and we can manage risk, at first against the 9-day and then hand it off to the 23-day. If it gets below 17.50, right? So if you're going to buy it about $18 or so, and so you have 50 cents of risk in this name. Below 17.50, there's no reason to be involved in this name at that point. If it does go down that way, then no buy, right? Keep going. AMD is looking really good this week. Again, has this little flag. It may need another day or two to build it out. That's okay, right? It may be more to the end of the week, but look at this volume dry off right over here, right? As it's pulling back. That's exactly what we want to see. Bigger picture. This was an important area, so a pullback makes sense. It's, I don't think it's going to close this gap, but it could, right? And that would be definitely a place I'd be interested in buying if it came all the way back over here. Again, I think it's unlikely. I'd start buying if it could start to turn around, start to turn up again, right? How far does this pullback go? So I'm not buying Monday morning. I would want to watch this for at least half a day, if not longer, to see the price action on this. But overall, just a very, very strong looking name. And I think this one has a lot of upside potential in it. That's AMD, one of my favorites. New. So this is New Holdings. Again, they're in, I think they're in some kind of banking or finance type thing. They kind of got destroyed, right? Down to $3 from $12. But look at this strength on this side of the chart. Every earnings, they're just killing it. And now we have a nice place here that we can manage risk appropriately against. It's not a very high price name, but it does trade a lot of shares. And again, this is just a beautiful little flag right here, right? In an uptrend. That's what we're looking for. So I think, above 710, right? 710, maybe. I wouldn't even mind if this pulled back a little bit more and let this 23-day EMA catch up a little bit more. It's a little bit on the extended side, but look at the volume. Nobody selling. All right, two more. ACVA. This is the car auction one. Again, it's got just a nice little flag is building out. We can, 1650-ish or so. Below 1650, I don't want to be involved in this name. But you see how it was supported 3 times now. And again, the volume on the pullback is like nothing, right? Beautiful. Last one is Google. It just has this nice little flag within the uptrend. That's what we're looking for. Very easy to manage risk, right? If it falls back below 120, why would I be involved in the same? That's a $5 risk on a $125 stock. I mean, that's very low risk. I think 120 is where I'd want to be. You can even extend it to 119 if you really wanted to and use that 23-day. And if that just visually makes it easier for you, I get it. But again, I would definitely be careful for if there's a big gap up on Monday. The market did get a little bit ahead of itself, I think. And so A big gap up would be very, very extended, and that would make me tell you, okay, wait, maybe toward midweek or even end of the week to consider buys, just because you don't want to buy extended, and then it's super hard to manage risk at that point. Okay, good luck this week. Hope this video helps. Hope we all make some money this week. Take care. Bye.